price hikes and exposure to emerging markets, something that Kraft says that it's looking to gain exposure to. Kraft has until November the 9th to launch a renewed bid, which some expect to go as high as 850 or even 900 pence per share. Lionel Melka is co-manager and head of research at Bernheim Dreyfus Co. Lionel, welcome. Very solid set of numbers coming through from Cadbury this morning. Is there any reason, in your mind, why a potential merger between Kraft and Cadbury shouldn't go ahead?
Such a merger is going to bring a tremendous amount of synergies, and this is a transforming deal for Kraft. They need to get this deal done. I think there's more pressure on the Cadbury side, on the board, to soften their negotiation stance, and this is a very logical deal. This deal should get done at the end.
Okay, and what do you think a realistic price tag is? Because since the first bid was launched, I mean, Cadbury has gone up quite substantially, now trading right around the 800 mark. Could we go as high as 900 if we win another deal?
It won't make sense for Kraft to pay above 850 pence. I mean, at the end of the day, it's all about sharing synergies, and this deal has to be logical for Kraft shareholders as well as Cadbury's shareholders.
Ultimately, Lionel, it seems to me to be about cash flow, and in that respect then, because the difference between cash flow yield and Kraft and Cadbury's is so wide, that Kraft might have more success in raising more cash in the debt market to up that bid price. And if you look at multiples of other transactions in the sector, you could advance an argument to get somewhere near to the 9.50, even £10 per share mark.
Mark, you're looking at I think at the multiple observed on the Mars Wrigley transaction, which was like 18 times EBITDA, but it was a gum business, and the gum business is far better than the chocolate one, which has slower growth rate, and the Cadbury doesn't deserve a multiple between 12 and 13, I think, EBITDA, not the same multiple as a pure business.
Lionel, with regards to antitrust issues, I mean, would this be able to go through? It would be a pretty big merger.
We are at Bernheim Dreyfus. We expect this deal to be cleared by antitrust authorities. We expect a phase 1 in Europe. You know, both businesses are quite complementary. You don't have very dominant position. Cadbury is very strong in China. Kraft is, of course, very strong in Americas and South America. And we don't really see an antitrust problem.
Okay, Lionel, thank you very much. Lionel Melka, managing partner at Bernheim Dreyfus and Companies. Stephen's still with us in the studio. Ralph still with us as well. We've been talking about Mervyn King and about potential splitting up of banks, etc. John writes in and says, why haven't you discussed the capitalist option regarding Mervyn King's solution to banking on splitting the banks, namely let them go bust? Iceland had a far greater implosion of the banking system than Britain, and yet they survived. Why are these businesses, which the banks are, after all, not allowed to go to the wall in Britain?
Why do we let good money chase bad? Yeah, I mean, this is the question I've had the whole time. You know, perhaps clearly letting big institution fail would be the non-political answer for the monetary authorities to make, because that would have increased deflation risk. It would have done all sorts of things that they couldn't allow to happen. I mean, maybe Ralph can give a sort of sectoral.
We did see bank failures in the U.S. In fact, to date, we've seen 98 bank failures in the U.S., and the business is still there. The industry is still there. I do agree that we can't let the top 4 banks, especially in the UK, or the top 3 to 4 banks in each one of the European countries go under. Simply, the money supply is tied too closely to it for us to do that. So in that way, I kind of agree with Mervyn King that maybe part of the banks should be almost nationalized. Maybe they should be a department of the government, and maybe the leader should in fact be elected in these particular organizations. But quite frankly, we have to allow some of them to go bankrupt simply because we need innovation within the business.
Yeah, systemically important banks, though, I mean, if we learned that from the failure of Lehman Brothers, was that to let its ultimate collapse play out in a free market, you can get disruption and dislocation of asset prices that could last for years. I mean, no one is typically happy when they see bonuses rising to £6 billion in a marketplace like this.